Hello again, this is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is June 18th, 2020. As always, we believe that information is power, and our goal is to provide our clients, friends, family with real-time and relevant market-related information. And our process creates smart and purposeful financial decisions that improve your life, your family, and the community you care so much about. So let's get into our three headlines of today. Well, today we had the initial jobless claims for the week of June 13th. It was 1.5 million initial claims, and that was more than what was estimated or expected, but bigger picture, it's down from June 6th and May 30th. So what that means, to put it in perspective, is that the trend is our friend, meaning the initial claims are going down. I don't know if the headlines will actually show that. They're going to show and I think today's headlines will show higher initial claims than expected. But keep in mind, the expectations are based upon economists, and economists are always wrong. So the expectations might have been a little bit better by economists, but it doesn't really matter. We don't want to literally look at the expectations versus reality. We want to look at what is the trend. And so since May 30th, and 6th and June 13th, the initial claims the trend is going down. So that marks the 11th week of a deceleration. That's extremely important because we want to see the trend continue in the right direction, which is claims are coming down. So it's a positive, regardless of what the headlines report later today. The second topic for today is markets climb walls of worry. Historically speaking, you don't ever want to bet against the equity market long term, especially the United States and America. And in the short term, there's always going to be a negative headline that's going to steer you, sort of create and incite your emotions to do one thing versus taking a step back, an analytical long-term view and approach. And that's what we do at Blanke Schein Wealth Management. We apply common sense, but also some analytics and some real critical thinking as it relates to the situation at hand when we go to invest for our clients. But ultimately, that's what's happening right now. You know, markets erased a 300-point down open market this morning, and we're positive at this moment. Who knows how we close at the end of this day? But ultimately, the markets are looking like the most recent headline Johns Hopkins reported as it relates to COVID-19, that there's still no signs of a second wave in Europe. So the daily new infections in the European countries, and we're talking Italy, Germany, France, the UK, Spain, who are all ahead of the United States, keep in mind. So we actually have empirical evidence, real data as it relates to around the world, how other countries globally, what the trend is for COVID-19. And ultimately, according to Johns Hopkins, the second wave in European shores seem to be just down, which is good, because if you look at what's happening on a regional basis per capita in the United States, the Northeast has been hit hard, the Midwest has hit hard, but both of them are on declining sides of the COVID cases. Now, the South and the West in the United States are now seeming to peak. So this thing seems to be regional, as we're seeing different states going through different spikes. But the good news is that COVID cases increased, but they also come down on the other side. And it seems to be in the South and the West, even though we're spiking a little bit in COVID cases right now, it doesn't seem to be the same rate of infection that the Northeast had, or let's say New York, New Jersey initially. So even though this virus is traveling through the United States regionally, and that's sort of what the pattern of behavior seems to be playing out right now based upon the data, the science that's being reported, and Johns Hopkins is on top of it. So markets are looking through the negative headlines, but this is a real serious thing. It's not to take it lightly, but it also understands that if you look where other countries are, as I just referenced, there is a downward sloping trajectory on this. So that's a positive as it relates to this. And we'll continue to monitor this because this could change at any time. So my final topic of the day is checking China. You know, yesterday I reported that the U.S. Secretary Mike Pompeo met with China's top diplomat in Hawaii, and that actually did take place. A high-level face-to-face talk had, amongst the tensions was really positive to see that the physical face-to-face meeting since the trade deal has been signed for the United States and China. So both parties came to the table. Pompeo stressed that the need for fully reciprocal dealings between the two nations. He also stressed that the need for full transparency and information sharing to combat the ongoing COVID pandemic and prevent future outbreaks is absolutely critical. So the good news is that they met face to face. I don't know if that's been reported or will be reported in any publication, but that's a positive for the U.S., but also globally speaking from an economic standpoint. Markets are watching that. They have been paying attention to that. I reported on that. I'm stressing that this is very important. And good news is they had a good meeting yesterday. So the United States just expressed how they're checking China and asking them to be more forthcoming. Now, that could change, but as right now, that's another net positive. So that's all we have for today, Thursday. Thank you. This is an audio edition only, and I appreciate you listening. Please like and subscribe and share to friends and family that you want to share the good news to. Thanks. Have a good day.